Hello and welcome to Virtual Investor Conferences. My name is Bob Power, and on behalf of OTC Markets, we're very pleased you've joined us for our next live presentation from E3 Lithium. Before I introduce our speaker, a few points to note. Please submit your questions in the question box to the left of the slides. If you're interested in scheduling a meeting with E3 Lithium, please click on the Meetings tab found on the left navigation bar. You'll be able to view the company's availability and submit a meeting request. On a final note, all of today's presentations will be recorded and available for 24/7 replay. At this point, I'm very pleased to welcome Chris Dornbos, CEO and Director of E3 Lithium, which trades on the OTCQX Best Market under the symbol EEMMF and on the TSXV under the symbol ETL. Welcome, Chris.
Yeah, thank you very much, and thanks for having me today. I'm going to try to get through this in about 20 minutes and leave some time for some Q&A. So if you do have any questions, definitely throw them in the chat, and we'll get to hopefully as many of them as we can. As any junior public company, we have some forward-looking statements that might be made today, so have a read of this. It's also on our website, so you guys can have a look there. So setting the stage for E3, and for those who haven't seen this story before, our goal is to become a global leader of responsibly sourced lithium. And there's a couple nuances there that are really important. One is that a global leader is a very true goal for this company, given the size of resource that the company holds here. And we also, because of the DLE or direct extraction methodology, we're also able to produce lithium in a very environmentally sustainable way relative to how it's currently produced on the market today, whether that being hard rock or solar evaporation ponds. So we're very excited to be developing this project here in the province of Alberta. A little bit about E3, just to give you the high level overview. We have a very significant resource base, 23 million tons LCE. And what that means for the market, if you look around at other lithium projects and other lithium companies, this is one of the largest lithium resources in the world. It is an absolutely massive opportunity. Paired with that is direct extraction technology. And this is something that is up and coming in the space. We've been developing a technology for the past 5 to 6 years. Other companies are also joining this race to develop technology. One of the big things that you've seen a sort of mentality shift on the DLE technology is that, at the very beginning, when we started this project, and E3 was one of the early starters of DLE, the majors out there were still working evaporation ponds. And now if you look around at the landscape, you look at Albemarle and SQM, who are both the two larger evaporation companies, holding some of the larger assets. They both now talk about implementing direct extraction where they can. So this technology has now become fully embedded into the world of lithium. And because of our resource base here and the size of the opportunity, it really goes to show what we're able to develop. So a couple other key points to this. The company is well funded. Our last financials outlined $17 million in the bank. We also recently got a grant, which I'll talk to you about in a second. Another big push for E3 is that we're going to be producing battery grade products. So in the landscape today, no company produces battery grade products at the back of their facility. It all goes through secondary refining. And because we're developing a project from scratch, we have the opportunity to go all the way to this new industry, which is the battery market. And the big difference there is that the battery market requires purity that has never been seen in the previous lithium market. And obviously the majority of the lithium consumed now and into the future is going to be going into the battery market. So that purity is absolutely essential. One of the big advantages we have here, we're in the heartland of Alberta, is that we have access to infrastructure, we have access to people, power, roads, everything we need to go all that way to be the refiner or converter, and not just be the sort of precursor material producer. I mentioned a grant that we have secured. This is fairly new, last week, $27 million from the Canadian government. I was in South Korea with the Minister of Innovation, Minister Champagne here in Canada, while he was on a trade mission through Japan and South Korea, and I joined him in South Korea to make this announcement. Obviously, if you look around the battery landscape in North America and in Europe, but especially in North America, the South Korean battery companies, whether it's CAM or cells, are dominating the space in terms of the first vehicles out on the market. The majority of them will have a South Korean battery in them, at least in some part. So a very important relationship with Canada and with North America. And we're out there on that trade mission and announced this $27 million. I can get into the details if anyone has any questions about it at the end, but effectively it's 34% of all of our project cost from August 2021, so it's retroactive, all the way through to FID, so post feasibility. So it's a broad grant, covers a lot of our costs, up to 34% of them. So very excited to see this show of support from the federal government. And obviously, fundamental to us getting this project going is keeping the company capitalized. So this is very important for us. Earlier this year, we also announced a deal with Imperial Oil. So Imperial Oil is the 70% owned subsidiary of ExxonMobil. They are basically Canada's arm of ExxonMobil. And one of the big reasons we went to Imperial was to get access to the freehold land that Exxon holds. And through this deal, we have an option on some of that freehold land in our Clearwater project area. But through the negotiations, we also ended up doing a bit more of a partnership with them. And that saw them invest in E3. They hold 5% of E3 through a warrant. And they also are giving us the support that they can bring, which is the fact that they used to own this aquifer. So the Leduc, this is the Leduc aquifer, that hosts the brine that we're developing today, was originally discovered in 1947 by Imperial Oil. And they worked that aquifer, they produced oil out of it into the 90s. But when you look at this aquifer and the percentage of fluid in it, only a very small fraction, a couple of percent, was oil. The rest of it was lithium-enriched brine. And so for the past 60 years, in our Clearwater project area, they've been producing this brine to surface on the back of producing oil. Because when you bring oil to the surface, you also bring the water. And that water is our lithium-enriched brine. So this is a very mature asset, and we're simply repurposing it. And we're repurposing it with the company now that originally found it and had owned it into the 90s. So obviously a big advantage for E3 in helping us get to that end goal, which is our first commercial facility. And one thing to note about our amazing team at E3 is that everyone that we have on staff is hired out of Alberta's Workforce. And that's a big advantage we have. That's going to continue when we get into operations and construction, drilling, welding, all of the stuff that we're going to have to do here, as well as all the professional staff, the operations staff. They all can be sourced from Alberta. 80% of what we're doing is done already in Alberta today. And the last 20% is the conversion. And it's not that complicated. It can be operated here in Alberta. And obviously we're not developing that. That's brought in, the technology is brought in from the majors like Veolia and those people who design and engineer these types of facilities. I won't go through too much of the supply demand. I think if you're here, you're seeing the rise of EVs. The last couple of months have seen the biggest uptake of EVs. It's 18% penetration in the last couple of months. The world is moving towards this. And from that perspective, it's solidifying the lithium market because all of the gigafactories, all of the battery manufacturing is being based on lithium ion. There's not a single mobile application that doesn't use lithium ion battery. And as those factories get built and the capacity starts to grow, all based on lithium ion, it further solidifies this commodity. And lithium is in every one of the battery chemistries. So very excited about that. Our track record of success, I think, speaks for itself. This slide is here. It's on our website. You guys can go through it, see where we've landed in terms of some of the big success. But I'm here to more talk about where we're going. This is our PEA. Again, it's on the website. A couple just quick things. The PEA price was used at $14,000 US per ton. The spot price is now trading somewhere around $80,000 per ton. I would say long-term offtake contracts are probably looking at $20,000 to $30,000 per ton, depending on a couple of the metrics. So obviously good value for us to be grown here. And the details are there. The details are actually in also our technical report that's public. So, but lots of value for this project. I've never actually worked on a project in my career that had this significant amount of margin that this project will generate. So when we get it into production, circa 2026 plus minus, this makes very, very good money. This is what it breaks out into, sort of three main pieces. The brine production is what we do in Alberta. The DLE I'll talk about on the next slide. And then the conversion into a lithium hydroxide monohydrate, again, is we're going to be using off-the-shelf technology companies that do this for a living. And we're working through that right now. A little bit on our direct extraction. So we've been developing this. We're very excited about a couple of the key metrics that this has. The selectivity over lithium and the kinetics, the speed at which we can get the lithium out of the brine, set this apart. And that's when you look at the trade-off between a 75 milligram per liter brine and how you make that economic, there are two big pieces. One is the producibility of the aquifer. So grade is relative to how much it costs to get it out of the ground. So if you have lower grade, you have to move more fluid. You have more volume of fluid to handle to get the same lithium. But if you have a higher producible aquifer, which we do, the cost to move that fluid is significantly less. And that's the trade-off. And that's why, for us, the Leduc Aquifer in Alberta, which is a prolific, world-class producer of fluids, works at 75 milligrams per liter in terms of its ability to produce. But then the other side of this is that the speed at which we can get the lithium out is very fast, and we get higher recoveries, which means we're maximizing the efficiency. And that comes down to the cost to take the lithium out, to run the DLE plant, is reduced because of that smaller equipment required, because you have to hold the brine for less amount of time, and maximizing the recovery, getting all the lithium or as much of the lithium out as we possibly can. So when you look at this from a high level, we're not trying to reinvent the wheel here. And I think this is really important because a lot of people see DLE and they go, new technology, high risk. The reality is that DLE, ion exchange, which is what we use, and not all DLE are equal. And I think that's really important. But the ones that you're seeing advance closer and closer to commercial are the ion exchange processes. And the ion exchange has been used for over 50 years to get metal out of brines, out of water. Half of the uranium in this world is treated using ion exchange. If you have a water softener in your basement, you have an ion exchange. So the systems that are being deployed in this world are stock standard. What the companies like us have developed is a highly selective, lithium selective material, ion exchange medium or sorbent or resin, or lots of different words for this type of material. And that is what is proprietary to E3. The process around it is pretty stock standard, and we're using companies that build this type of equipment, for a living to help us develop it for us as well. So when you look at this from the landscape, there's components of this that are new, but every piece itself has been done in the past and will continue to be operating. So to de-risk this project, we're using as conventional processes and equipment that we can get our hands on, which helps us bring that risk level down. And for any new project, that bringing that risk down is fundamental to success in my mind. When you look at the resource, I think this really provides the big blue sky potential for E3. And the reason for that is that our first plant, we're talking about around 20,000 tons per year. That's what we put out in the PEA. We've kicked off the PFS, and when that comes out, that yearly production rate might change a little bit, but in and around 20,000 tons is what we're thinking. And that's the first plant. The benefit of this resource is that we can expand our production from that 20,000 tons, once successful, to around 200,000 to 300,000 tons based on the brine resources that we have underfoot here, which means that we can be competing in the world stage as one of the largest lithium producers on the planet. And so we get the first plant going. That's the risky part. We get it running. Once we do that, everything's proven. We just start expanding. And when you look at the market and you look where the real supply-demand imbalance happens, which is where you might expect the highest prices paid, it's around 2026. That's a prediction from guys like Benchmark. So from that perspective, we're bringing a product onto market when it's needed the most, which means we should be able to attract a very good price for it in the long term. Operating in Alberta, I think, sets us apart in a lot of ways from the perspective of risk. And one of the things that is really important for companies like us when you're developing something is to keep a close eye and always be monitoring your risk. And generally a project that's being developed gets to the stage where they've done the engineering and they're ready to start the detailed engineering design. They start the permitting process, and then they run into all sorts of slowdowns because permitting takes time. If you're remote locations, you have to build a remote camp. All of these things really start to hinder a project. We're in the heartland of Alberta. Our project starts 10 kilometers north of Calgary here. It is farmers' fields. It is in a very well-established regulatory regime because last year our energy minister brought into law a bill that put lithium minerals from brines, which includes lithium, into the Alberta energy regulators' hands. And they regulate oil and gas. And it makes sense because how we operate in this province is just like oil and gas, conventional oil, which is that we pump a fluid from an aquifer, we bring it to surface, we move it to a facility where we take the commodity of value out. If it's oil and gas, you're separating out the oil and gas, and then you're putting the waste stream back down to the aquifer. If you're oil and gas, it's lithium brine. If it's a lithium project, it's brine without lithium. So from that perspective, we know how to operate this project. We have the skill set. I've already mentioned that. And we have a framework for consultation. Our ESG, when you look at the social side of ESG, this is very widely socially accepted in Alberta, how we operate this project, because it's how Alberta has made its money since 1947. And it's a well-oiled ecosystem, what we're developing into here. So there's obviously no guarantees of permitting, but we're very encouraged. We've seen the government has been working on what's called Directive 56. You can actually go on the AR website and download this directive. Anyone can. And what you'll see right now is Directive 56 is how an oil and gas company applies for its licenses. And what they're doing, and it hasn't been published yet, but they're working on a revamp of Directive 56, which is how we will eventually get our licenses. And we're expecting to see that published in 2023. We've seen a draft of it. But we expect it to be published sometime in 2023, which has now the language minerals from brines. And that enables us to therefore go apply for the commercial licenses that we're going to require. And it's going to be in place most likely next year, well before we need it. On the ESG front, there's three big components that people generally look at when they rank you from an ESG perspective. Land use is a big one. We use less than 3% of the land relative to hard rock mine or salar because we literally just drill some wells, pump the fluid out, put it in a pipeline that takes it to the central facility. So the biggest surface impact we have is the central facility, which every project has, but we don't have the mine or the salar. When you look at the water use, this is where the biggest issues are happening in the lithium space, is on freshwater usage. This is a closed loop system. There's no interaction with freshwater aquifers. We take the water out, we put it back down into the same aquifer. There's no contamination here. There's no use of fresh water that is from the development of the aquifer itself. The last piece of this is the carbon. This is one that usually you see numbers attached to, your carbon footprint on a per ton basis of lithium produced. What we are looking to implement is a fully electric process so all of our energy consumed will be electricity. And then if you can have a low carbon to no carbon electricity source, which we can get in Alberta, and it may not be there day one, but we believe that we can grow into that. And the Alberta government itself is decarbonizing the grid as well. Then you can go to a low to no carbon product. And when you look at the EV companies, this is one of their biggest metrics, that other than quality, it's carbon footprint, because especially in Europe, you're taxed on that carbon footprint for the whole vehicle. Looking at our path forward, 2022 is wrapping up. We had a very big year this year. Aside from the fact that we've continued to develop our DLE pilot, which I saw some questions pop up here about, and through the questions, I think we'll get a more fulsome update. We've drilled the first lithium wells in Alberta, which is leading to our M&I. We've designed a lithium production system. all of these things, most of them anyway, happening behind the scenes as we get some of the big hurdles out the door so we can announce them. But other than the advancements on the technology and the process, we've also brought in Standard Lithium, Imperial Oil, and we've brought in the $27 million funding. Going into 2023, I think you're going to start to see a lot of big advancements in the project from a perspective of our resource upgrade. So that's going to be out likely in Q1. And the data is now there. So we're just finally putting the pieces together. We're going to be operating our pilot in 2023, which is fundamental. I think that's probably the big catalyst risk hurdle. And then obviously working on our pre-feasibility study. Our goal right now is to have that out by the end of next year. And also through that process, we're going to be producing lithium hydroxide as we work through the process development with our partners on that side of things. That all wraps up with the pre-feasibility study. Into 2024, we start the detailed engineering design, we start the project finance work, and we look at start applying for our commercial permits. We expect about 12 to 18 months to get the permits, and about the same time for the detailed engineering design, and we'll be working on finance so we can start construction, hopefully sometime in 2025 to 2026, and then we're estimating about a year to get this all built. Sorry, let me just click over. This is our updated stock chart. We've seen a very strong performance relative to our peers. So if you take, say, the last 6-8 months and you plot against our peers, you're going to see that we've outperformed all of the lithium peers, or most of them anyway. And the main catalyst for that were the two big announcements that we put out, Imperial and the funding. And I think as you start to see more and more of these big catalyst announcements get put out, you're going to start to see us diverge more from our peers as we start to capture the value that they've been able to capture. And some of those comparisons are guys like Standard Lithium, Lake Resources, Vulcan, where you've seen them obtain, that $1 billion market cap, and some of them, Standard Lithium, and things come off a little bit, but generally held their value. And when you look at the differences and similarities between us, we have the bigger resource. We all have about the same sort of goal for the first production. We are all sort of looking at a similar project in terms of it's a DLE style. But the big difference in our value, I think, can be attributed to the fact that we need to pilot our technology. And I think also some of the bigger announcements over offtake and partnerships with some of the bigger companies. Now, we have that obviously with Imperial Oil, but I think you're going to start to see more of that come through. Anyway, I'm going to wrap it up here and open it up to questions. So I'll just give it a minute. We've got a bunch coming in here. I'm just going to go through them. So the first question came in even before I started the talk. Thanks for that. So the status of the pilot plan. So we are in the near future going to put out a fulsome status to the market. And so I'm not going to get into any detail. Unfortunately, we really wanted to have it out by now, but it's not quite ready for us to announce. But our plan is still and has not changed to operate that thing in 2023. Our goal is somewhere in Q3, and hopefully sooner in Q3 than later in Q3. So that's what we're working towards today. And we'll have an announcement out that will outline the cost, the time frame, all of those important factors that we want to get to the market. I will say that everything is on track. We're very excited about the work that's going on to get that out the door. So that is, it's obviously a big catalyst, and we want to keep the market informed. And when all of the pieces are finalized, which is very, very close to today, we'll get it out to the market. Next is the CapEx. So it's in our slide on the PEA NPV slide. It's also in our PEA technical report. It's about $600 million. So we have a strategy to find that funding. We've been talking to the banks, and they're telling us that they'll leverage about 60% with debt if we have offtake agreements, which for us is something that does and will happen, because all lithium today, if it's in the battery market, is sold under offtake. So eventually you do get those sales contracts. We're working really hard to secure a bit of capital with those offtake contracts. That's why we're not announcing the sort of non-binding MOU style that you're seeing out in the market today. because we're looking for meaningful commitments to the capital that we need. So that's part of the strategy. The other part is that there's government funding coming out, and the Canadian federal government has announced around $1 billion in infrastructure funding, and the program is supposed to be announced here sometime soon, talking about the specifics of that. And you're also seeing IRA DPA funding from the United States able to flow into Canada, and I think you're going to start to see more and more of that coming in the near future. So in terms of that, the second part of that question was, if we had more capital, could we move the project faster? And my answer to that is, in 2018, yes, but at the point now where we are capitalized, and it's just a matter of time now. Everything is in place. We've been working in the background, as I mentioned, for the past pretty much 2 years now. We opened up our own facility in 2021, February 2021, and the developments have been rapidly escalating through having our own facility. And so we're expecting, again, to have that pilot running in the new year. So, all of that stuff has been implemented. It's underway. These things don't happen overnight, but we're moving as fast as we can, which is, I think, really good for the market, because we do need to get this pilot out. In terms of moving our resource from inferred to indicated, was the question. That's happening. So the thing that we are missing was some lithium sampling from the part of the aquifer we actually plan to operate. So we went out and drilled 3 wells in the Clearwater area where we plan to first operate the plant. And that information was needed to get to the next stage of the M&I, which we're expecting to have out shortly. Our relationship with Imperial Lithium is another question. We have an MOU with them. I really like this company. It's supported by Robert Friedland. The folks there, Don Sadoway and Emily Bodwin, are amazing, very smart people working for them, developing what I think is going to be the next generation of batteries. The benefit there is that that battery gets manufactured at the back of the lithium plant. I think just when you look at it from the broader landscape of how these need to operate, and the efficiencies of bringing that to the lithium plant, and the nuances there are many, but the end result of that is that we would love to see batteries get manufactured in Alberta, and we want to be part of that. And this is not for like 2026. Our first plant will likely produce hydroxide, but it's for the next generation, which is, circa maybe the next plant or phase 2 or 3, where we might bring lithium metal production in and partner with someone like a Pure Lithium. And we've been really enjoying working with them. Another good question, what is the biggest obstacle to production? At this point in time, it is really just a time factor. So to get out and make sure that when you build your $600 million facility and you spend that capital, that capital is deployed into a plant that works and operates at the end of the day. That is fundamental. And when you look at all the pieces that have to go into that, one of the big ones is how are we going to finance that? And the majority, as I mentioned, of the financing comes from the banks. And when you go to them with your feasibility study in hand and your offtake agreements, and you're saying, we're ready to build this thing, they look through it and they have their own people vet it, and you need to have everything done properly, even to get the financing. And then you have to go build the thing, and then it needs to operate and be successful in producing the product that you're aiming to produce, right? Which is, for us, lithium hydroxide. So doing that methodically, doing that, making sure that you have all of the right pieces in play, doing all the right testing ahead of that is fundamental to success. And so it's like measure twice, cut once scenario. So we are working through that right now. But again, the obstacle there is really just time. It just, those things take time. We would love to be building the plant today, the commercial plant. That would be amazing. But we need to engineer it. We need to make sure that it's been vetted properly. So we're estimating 2026. And I say that because I think that the technology development, when you see where the market's gone, you've seen other DLE technology providers emerge and be successful. The question of is DLE going to work is, I think, gone now. I think the question is when. When are you going to see the first commercial plant? And it's likely that E3 won't be the first. There'll be a couple other projects that I've seen out there that are a bit ahead of us in terms of their engineering. And so that's good for us because it will demonstrate that DLE is feasible and viable and help the confidence come into the market. But I expect us to be in the top 5-6 companies producing lithium using a direct extraction. So I think for us that bodes well. I do think that the biggest hurdle to the battery market is the supply of lithium. It's the one that is the most constrained because all of the new supply needs to be brought on from new projects where you can't borrow from other markets. So we need every project out there, in my mind, that's being proposed that's at a certain level, say like PA or more advanced, to get into commercial operations. We need them all. So a question about, are we working towards making lithium hydroxide now, or are we waiting until our pilot starts producing? It's both. The biggest issue is that we concentrate our lithium, and so we create a very small volume. So we need a bigger production to get enough to make a meaningful sample. So we make hydroxide. We have in the past. We're working with our partners to make it from a commercially designed system, and then when the pilot operates, we're going to make it in much larger quantities. So that's going to go. So anyway, that's time. I'm getting the bum's rush out of here. So I appreciate everyone's time today on the webinar. Obviously, feel free to reach out to our investor crew, investor at E3Lithium.ca if you have any more questions, or visit our website. Thank you very much for everyone's time today.